In this video, twin traders, yes twins, combine fundamental research with technical analysis for a doubly good trade. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, two twins show in step-by-step detail the powerful trade that they made on an earnings play in Zoom. Let's get to work on sharing these important trading lessons from our prop desk in New York City so you can grow your trading account.
Hi everyone, my name is Caleb. And I'm Jonathan. And we are here to present our playbook that we did on Zoom. So obviously on the afternoon of the November 22nd, Zoom came out with their earnings report. We took this trade as a 2-day trade. From day one, I ended up doing. Day two, Jonathan did. Starting with the trade thesis, Zoom reported earnings after the close on Monday, November 22nd. In regards to EPS and revenue, the report was strong. They had an EPS.
Just sort of take a step back. So where are you guys in your development process?
So we are both senior interns. We have actually a week and a half left currently.
And then what happens potentially after your senior internship?
Ideally, Jonathan and I would both love for the opportunity to be offered a spot on the desk. Ultimately, that would be up to everyone at the firm, just regarding how that we have done throughout our 16 weeks so far here at the office.
And what does the firm ask you to do towards the end of your senior internship if you're applying to the firm?
So basically, we both separately we created a personal development plan. From what I've researched, I believe that there is a playbook that we do have to present. Whether it would be together or separate. I know there's different, we both have different playbooks that we could present. And then basically completing the courses with DNA and Winning Trader.
Okay, and so for the personal development plan, that sounds exciting.
Yes, sir.
What is that detail?
So for me, I took a lot of different categories with it. I have basically a student category, a mentor category, family, health and wellness. So for me, I was looking at it, and obviously one thing growing up, obviously Jonathan and I are very close. I think we are like that because of our family. Our parents.
You look alike.
Yes, sir. We are fraternal twins.
Unfortunately.
Our family, we've always been very close. So our mom and dad have always been our strongest supporters in whatever we've done. So our dad, he always told us, he said, the day you die is the day you stop learning. And so one thing that is really important with this industry is that you are constantly learning. You have the ability to adapt. You're constantly growing, and the drive to improve and grow every single day. So I think just with how close we are with family, and obviously with them supporting us throughout everything that we've done in our life, it's very something that hits home pretty hard, just because that's something that our dad always taught us.
Yeah, and that's important to us. So we don't ask you guys just to come up with a business plan for how you would trade. We want you to come up with a personal development plan. So there's different facets of your life, including your family, including your health and fitness, including your daily routine, and also your trading. We're going to do a lot of that here.
Absolutely.
And so to be good at trading doesn't just require focusing on trading. It also requires you hitting the mark in the other areas of life. And we don't want to build small traders, we want to build big traders. You're here to do really well. Nobody walks in the halls of SMB. Nobody walks the halls of SMB fantasizing about making $50,000 a year. And that's great for a lot of people, and I don't mean to minimize that. The goals are much bigger.
Of course, absolutely.
And so to get that right requires a holistic, comprehensive approach to your career. It is not just, and I think people may be surprised to hear this, it is not just trading, training, reviewing, trading, repeat.
Yeah.
No, it's about, you're not going to become as good of a trader as you're going to be unless you're doing the other stuff right as well, unless you're just happy overall.
I think that's also a big thing
unless
too.
unless you're fit, unless you're eating right, sleeping right, and have a good life, have a good balance overall, and that's important. Like, that's how you're going to become great, or as good as, and even if you're not great, as good as you are going to be. Not everybody can become great, but everyone should be as good as they can be. And so that's super important to us. And then, from there, we sort of see how it goes. But yeah, I mean, that's important to us. So we'll look forward to reading that from you guys.
I was going to say, just adding on to mine real quick. I know Caleb's, I think when we looked at him real quick, mine was about a little bit longer in length, but for me, what I focused on was literally just trying to hit every aspect of life. Just because when we had our meeting, or the lecture that we had here with Dr. S, Dr. S was saying how we look for diversification in all walks of life. You can't have trading be your only thing, because ultimately how you do is going to control the rest of your life, and that's not one thing that should be the main priority. It's kind of the balancing act of everything. So I just tried to hit every aspect of life, anything from spiritually, mentally, physically, emotionally, just covering the bases of all of it. So I just wanted to add that because I wasn't too sure what else he fully did, but I was just kind of just going from my perspective on it as well. So going to the trade thesis of this report, Zoom reported their earnings after the close on Monday, November 22nd. In regards to the actual report, it was a strong, I guess not really, you wouldn't say a strong compared to its past, but it was a triple beat. They did beat in EPS and revenue, and they raised guidance as well.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free, intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
They had an EPS beat of 2 cents, which was 1.84%, and a revenue beat of 30 million, which was 2.94%. However, the most important factor to this is when you are dealing with a growth stock like Zoom, the biggest takeaway in this was that they were slowing growth. So from a fundamental viewpoint, obviously vaccines have been being distributed, people are going back into the offices, and so basically people are not at home, so they're not going to be using Zoom as much, and they're going to have more face-to-face meetings.
People get confused about this. When you're trading a growth stock, stocks have a growth stage to them. The most important thing when you're trading a growth stock is their growth. And this is a good example of how maybe the bottom line may have beat, but what's most important is their growth. And then when you're trading, don't get hung up on looking at a growth stock and making the mistake of saying, oh, they're trading at above a 20 PE ratio. It's not sustainable for this stock to be trading at these prices relative because their PE is too high. That's not the way that growth stocks are valued in the marketplace. When they're growing, they're going to get a higher multiple. And as long as they continue to grow, they're going to catch a bid and they're going to catch momentum to the upside. But there becomes that period where a growth stock comes out of the growth stage and shifts from a growth stock to a different type of stock, maybe just a strong stock. And when it does that, it's got a lot of the momentum that needs to come out of it, and it needs to change from how you value a growth stock, which is way higher than a traditional stock, to being more of a traditional stock. So it's got more to fall.
When I go to the next slide, you'll see the daily chart, and the daily chart from over the past year has just been on a steady decline.
And this is unusual because this is a COVID name.
Correct.
This caught a bid during COVID. Everyone was on Zoom. All of us were on Zoom, and they grew a tremendous amount.
Hitting record numbers, exponential growth, everything. Ever since coming back, it's just been at a steady decline.
Yeah, and that makes sense, right? So then when COVID's over, there's going to be more face-to-face meetings, less reliance on their product. So there was that complication, that variable that we need to think about when we're thinking about Zoom as well.
So one thing that what I've learned this earnings season is that I really do like the continuation with the stocks that do report after hours. For both whatever direction they go. If they have a first move up in after hours and then a continuation up move in pre-market, one thing I'd look for is for a first move up into certain levels for a trend trade. However, with Zoom, obviously after their report came out, they had a first move down in the after hours. That downtrend continued in the pre-market, so we were looking for that off the open as well. So I was looking for that confirmation for that first move down off the open, looking to see what levels were being tested and to see where I was looking to enter the trade. So for me, there was the pre-market low was 214.1. We had a break of that off the open, and then we hit 212 and we tried to recontest that area. However, we completely failed from there. So I ended up entering in this trade with an average price of $207.50. For me, of which this is, I'm not a huge fan of it just because it is a larger risk for me. It's a $4 risk, which is a little larger than I would like. But the price that we were contesting, the actual price was $211.87. So for me, what I would ideally like to do is with getting in at $207.50, I would, if we were to recontest the VWAP at that time, take off size there with an ultimate stop at this 211.50 area. And for my reasons to cover, I usually with these trend trades, I usually like to take off a certain percentage. Usually it's 10% increments at new intraday lows.
I'm sorry, is this reason to sell? You're getting long here.
No, we shorted.
You got short 207.50.
Yes, sir.
Okay, with a stop above 211.50.
Yes, sir.
Okay, that's a big stop.
Yeah.
And you're covering when it makes a new low.
Correct.
So you're covering into the weakness.
Correct.
Okay.
So just going over fundamentals of Zoom. Their public float is 215 million.1 shares. Institutional ownership 61.5%. Low percentage short float 4.63. The average 20-day volume is 2.96 million shares. It does have an ATR of 10.05. And then obviously over here on the right-hand side, we have basically the earnings report and everything, the percentages and the beats. So one thing, going into when the earnings report came out, we were looking at emails. We had two emails that piqued our interest. The first one was from John Marino.
That's really good. And I brought this up to you before, that I hoped to see you start to add this into your process, meaning, hey, you want to trade a stock, you've got certain setups that you're looking at in the stock, go read the research that we have sent to your email and see if anything sticks out to you so that you can have a little bit more confidence with what you're doing, have a little better information as to what you ought to do. And you did that here. That's really good.
Thank you. I know Jonathan and I too, when we do look at the emails, I know for Jonathan, he really likes the John Marino and Spence Tobias are the main two ones that we constantly look at. So I was gonna say, with the analysis and the research part of it, throughout the different news outlets and stuff like that, where we were able to kind of find the EPS and revenue beats, we really couldn't find anything to describe how the guidance was looking. So that's where we were like, okay, let's go in and look and find the emails and see if there's anything we can dig up real quick. And that's where the first quote here shows how the guidance was actually raised, making it a triple beat. However, the second quote from the email definitely starts to show the weakness in the growth, kind of the growing strength or the growing Just the growth of the overall. Yeah, the overall growth. So that was
slower growth.
Yes. So that was basically what made us kind of look at those two things. Are kind of the emails kind of confirmed the
slowest growth since at least 2018. Yeah, that's a good note.
So that's what we were kind of looking at was the fact that we had the news from the outlets, which confirmed kind of the beats, and then that kind of first quotation is where the triple beat and raised guidance comes from. However, our determining factor for our short bias really comes from the Spence Tobias quote about the slowing of the growth more than anything.
And that gets you guys looking more on the short side and game planning more on the short side, because the growth is even worse than what the headline read.
Exactly. And not only that, to me, yes, they were beats. It wasn't like they were exponential, 1%, 3% with a really negative growth mindset. Kind of turns the overall report to me very sour. The only way I would have really thought about this being bullish was if there maybe were, anywhere upwards of 10 to 20% surprises more than anything. But to me, it seems like even the beats are just more of a flatlining for the most part with a negative catalyst. And one thing I just wanted to touch up on as well, I think I'd have to go back and look, but I do believe that when we were scrolling through the emails, that these percentage beats were their lowest percentage beats from the whole entire past time of this whole entire run up. So that was something, even though they were beats, they were the lowest beats that they've had. And this was another one. This was from Yahoo Finance that they did the report. Basically the same exact thing that we found from Tobias and from John Marino as well, just basically talking about how we're, from a fundamental standpoint, going back into the office, more face-to-face meetings, and just basically just more touching on that subject of the lower growth. Back in December of 20, that's when we were at all-time highs of 486.83. Obviously, in December of 20, March of 20 was when COVID hit. You constantly saw everyone going home and having Zoom meetings. So obviously from March of 20 up until December, that's when it was in a constant uptrend. But from there, it's just been, as people have gone back, as vaccines have been able to be produced and they're widely distributed, as you can see that we're kind of been in this long downtrend from, I would say, the most recent, obviously, we could look like we had some potential pullbacks into certain areas, but for me, I really look at this from August, basically, just have been at a steady downtrend.
Yeah, that chart is broken, and you're gonna need for somebody to show you that the stock can stop going down and start to go back up. Now that may come from value buying over a multi-day period that steps in. That may come from a news catalyst that hits the market that changes the environment we're in. So, for instance, the South African variant could change everything, and we could go back into lockdown. That could cause some more fear, so maybe that could come in. They could find a new way to make money, but the point is, it's going down, and something different needs to happen. Another way is it could just put in a blow-off bottom. It could just get too steep to the downside on really heavy volume, putting in a technical pattern where things can turn around from. But the point is, it's going down, and something needs to change for us to start wanting to play this on the long side for the medium term or the longer term. From the short term, there might be some scalps, but that might not be worth your time. And for the medium term, longer term, it's you're still looking leaning on the short side, and maybe even for the short term.
And I know
it's broken. It's just a broken chart.
One thing to touch on when you say that is that as these levels that we were looking at from day one, day two, when this Omicron news came out on Friday, it gapped up over 5%. So
yeah.
That was one thing that, like you said, is that something needs to have it in.
But what's going to happen when people feel comfortable about the South African variant after we've gapped up 5%?
It's going to go back down.
Could be a good short.
Like I was talking about here, with earnings reports that come out in the after hours, I like to see for a continuation. So down move on the after hours with a continued down move in the pre-market. So ultimately would be looking for a first move down and to look into short into the retracements back towards VWAP.
Yeah, you know what else is broken in the same vein? Stock that did really well during COVID? Peloton.
When we were talking about it, it was because when Airbnb was hitting their highs as well, Peloton and Airbnb, that was when we were talking with Carlton, that's the two things that we were talking about is like thinking from like a fundamental standpoint, Peloton, everyone bikes at home, they're not going to need them anymore. Airbnb, people are going to start to increase travel, they're going to need to book places, so therefore their revenue is going to go up as well, whereas Peloton's going to go down. So that was kind of something that we we would always be talking about.
Look, in 5 years, these may turn out to be good investments, but we're talking about short-term trading right here.
Yes,
so we're not saying that if you want to hold Peloton for the next 10 years that it won't be above 100. We're not saying that. We're saying for short-term trading that the chart is broken and that it hasn't turned around yet for either of those names.
Yes, sir.
But you might own Zoom pretty soon, and it might be in 5-10 years double what this is. That is investing. We're not talking about that.
I think Bobble might be the other one too at the moment. It's one that's, it's beaten down hard. It's trying to bounce. It's coming back down. It's to me on the larger time frame, it's broken, but you're waiting for something to really show you a change of character and actually be able to sustain it.
Yeah. As Spencer says, investors should invest, traders should trade.
So I marked off some key levels here on the minute chart. So off that first initial down move on the break of the pre-market low, I ended up marking the pre-market low, 212 and 210. 210 we marked because we were going to be using the afternoon resistance. We're going to be using that for our day 2 levels. 212, the exact retracement to it from the original down move from off the open down to 211, it did retrace back up to 211.87. I did try to get in. I tried shorting it at 212, but I missed my first one by the 13 cents. So when we had that drop, the first drop down from 211.87, we went down to about like 203. So I looked to see like off of a sharp move, what's a quick 50% retracement. So that's how I based my entries off of that real quick. So that's why I had 207.
So for executions, you got to think about this. So let's say you think something should move to a certain level, should pull to go up to a certain level for you to short it.
Yes, sir.
And it's coming close to that particular price. And you really love the idea. And I think this is an idea you might really love. I think you might really like this idea. I think this has a pretty good fundamental catalyst behind your trade, whether it works or not.
Yes, sir.
I think this is broken in the longer term chart. I think it's got a good news catalyst in it. You notice a pattern in the after hours that was weak. I think this is a good trade. I like the trade. I like how you're thinking through this trade. Again, I don't care if it works or not. I like how you're thinking through this. And so let's say you think there's an area where you want to short it. When it doesn't quite get to your price, you're up on the offer, it's not getting quite to your price, you got to really have both hands on the wheel, as I say, and be ready to adjust. And so you might hit, let's say you want to short 1,000 shares at a particular price, and it's like, and this is an expensive stock, right? And it's 15 cents away on a $200 plus stock. I mean, you're going to have to hit 300 shares. And then you're going to have to, it's not quite to your price, like you're going to have to hit the bid for 300 shares. And you're going to have to put up another 200 shares on the offer, a little bit lower if you're not getting taken at the exact price you want. And then you keep the rest up at your optimal price. But you're going to have to be able to adjust to get into some. And then you're going to have to be flexible to say, I was a little bit too ambitious with my price. I banged into 300 on the bid. I put 200 up on the offer. I didn't get taken with that. It's starting this like lower consolidation area. I'm going to have to lower my offer a little bit more, put 200 shares out again at this lower price, stop against my optimal price for that 200 shares or higher, and adjust. And then, okay, if it's going sideways at these lower levels, now let me put my full position on here. I'll put a little bit of a tighter stop in here. but you can't expect exact executions, and you don't want to, particularly on a really potentially good trade. Does that make sense?
Yes, sir.
You fight for price, but you're flexible.
I was gonna say too, and that's why like when we first talked about like my entry compared to my risk was obviously it's a very high amount of risk that I'm $4.50. But ultimately, like for me, what my original game plan was, wait, if I short at that 212, and then I'm risking to pre-market low or back on to the open. So for me, ideally, it's like if I'm risking pre-market low, it's a $2 risk. But now because I'm getting in at 207 and I'm recontesting this 211.87 or 212 area, that's where I ultimately say the risk was higher.
And you don't have to just use your scalping skills to scalp and make money. You might actually use your scalping skills around something like this to position and get the right price for your trade. Like you might start it a little bit, it doesn't get to your price, you start it a little bit lower, it does actually go up and through your price, you cover a little bit, but then you notice a little bit above your price now, it really does fail, bam, you can like hit in for a little bit more. You're scalping around your entry. Does that make sense?
Yes, sir.
And you have to kind of work your order that way, because it might fall short of your optimal entry. You might have to enter a little bit early, start your position a bit lower, and then the thing might tank from there. Okay? Or it might go higher than you had anticipated, which is even better. That's better. Okay, so I'm short, I get blown out, I cover, the damn thing's up 2 points higher than I thought, but it's really failing up here. That's great. That's better. You want that. That's not bad that's better. I like those trades better. Heck, if it's 5 points higher, that's even better than better.
And as long as you don't let it run, if you minimize your
Just
losses.
you take your loss off and you wait to see the turn, and when it turns, you hit hard.
Yes, sir.
You swing the bat hard.
Going into the executions, like I said, on that initial move down from 212 down to 203, 50% retracement, 207.50, added sides into 208. I took some profit capture down into 203 spot 5, and then I wanted to, from there on, was going to be scaling out of 10% into new intraday lows. So one thing that I was kind of picking up on was as we were hitting new intraday lows, it was going down by like right around like dollar.
And look at that chart. These are the charts you want to clip, go back and look at. I mean, you were dead right when picking up that there was a fundamental catalyst here. This was a negative fundamental catalyst, a negative news catalyst. You were right to spot that in the notes, the research notes. I mean, this thing is just trading. It gaps down, it trades down, it pops a little bit, it doesn't really sustain the pops, it trades lower, it never makes a higher low. It's just, there's a sell order in this stock, it's going lower, it's probably going to finish low a day. There's a sell order in this thing, and it's probably going to last, it may last more than one day based on that chart pattern.
This one sale right here, I did kind of on this for the new low, we did kind of come up and did create a new high. So I did want to take off some risk into it while still capturing profit. And then ultimately, right here. So what I was looking at the current time on the tape, 201 and 199 was very heavy on the tape. You had your largest orders coming in at these prices. It was not going a cent below 199, and it was not going a cent above 201. So when I decided my final exit for this trade, I told myself, I said, okay, this is kind of that very, very heavy level that I'm looking at right now. If we break either side, if we broke to the downside, I was going to hold and look to continue to exit out on the new intraday low. I said if we broke to the upside, I was going to just exit out right there. So that's one thing when we ended up getting up to about, it was like 201.50, and that's where I took the exit. So, but on one of my improvements, I want to try to increase my tape rating skills because I don't know technically, like yes, that was a very key level there. However, from once it hit up, I think it got to a high of like 202. From there, went back down to like 196. So I want to, that's the improvement, even though it was, yes, it was still like my final 10% of my position size. Yes, it was still at a lower price than what I got in at, but that's just something that I just wanted to improve on, just because to see if there's something there that I'm missing.
Yeah, and the way you improve that is just go back and watch those moments. So what did it look like when it got above that 201.50 area that you were concerned about? You know, did it show you sort of, it wasn't really going up, it was heavy and weak and probably going to go back down again? Could you spot that? Would you next time cover and then reshort because you noticed on the tape it was pretty weak, and then just cover above the high, above your 201.50? So let's say it went up to 202.50, and you were going to cover above 201.50. You did, and then you noticed it was heavy on the tape, and then you noticed a turn around 202.50, hit it again, cover above 203 maybe, or something like that, or even 202.50 if you really want to be tight with it. That's a way to use your tape reading skills for that. Because look, it's a $200 stock. Yeah. There's a lot of players in this thing, and sometimes they go a little bit, and it's the middle of the day. I mean, sometimes they kind of go up a little bit more than they ought to. Great. So that's good. So go back and watch that.
Of course. So one thing too, obviously, Jonathan and I like to, this is the whole collaboration part of it, is that for the most part, Jonathan likes to take momentum trades. I like to take the trend trades. So ideally, one thing that I personally want to improve on is learn from Jonathan, have him kind of guide me on what he looks for off when he does like opening drive trades. Because ideally for me, to maximize this trade, kind of like what we talked about last playbook, take the opening drive trade momentum off on the break of pre-market low, take off momentum size down to the 211, then you start your trend trade. So I want to be able, for me, that's where I think of an improvement, is to learn from that. And then I talked about the better entries and then the tape reading.
I really like how you guys incorporated the research. I really like how you found a news catalyst combined with a broken chart. I really like that. So to me, this is a changing fundamentals trade. So I've taught this trade for years. I call it a changing fundamentals trade, which is people think X about a company, and then the next day they come in and the fundamentals are worse. And that's going to cause big institutional sellers to be less interested in the stock because the fundamentals are worse the next day. And that's going to bring out days potentially of selling. If the fundamentals are better, it can bring out days of buying, because smart money traders, big money traders love to look at fundamentals and the story and how they're projecting the stock to be doing over the next 6 months. And then you're adding to that a stock that's just broken, a stock that needs to go find a bottom. It's on this journey to wherever it's going to go. And we're just going to, we're going to let it go to where it's going to go to. And one of these days we'll talk about a reversal trade in it. But it's until it shows us the bottom, it's going down. And so I like, this is really good stock selection. And it's really good stock selection because the stock is broken on the chart and you're trading it on the short side, and it's got a negative news catalyst in it. And you're finding good places to trade and hold on and see how low it will go. I like that you are trading in the direction that it's most likely to travel in. So that was really good. And then, I like how you're thinking about where you should exit. And maybe you exited maybe you would have, next time, maybe you would have exited half or a third, or maybe you could have done that differently.
Mm-hmm. I was going to say that's also the improvements, is that for me, like, as I get more comfortable, from what I've realized is up here in the office so far, is I do like to just take small increments and just usually do like 10 or 20% increments each time. So that's the one thing that I need to learn to improve on, is just to be more comfortable and be comfortable with holding a larger size down into the larger move.
Yeah, I mean, you're in the right stock, you're in the right setups, you're on the right side. You make a lot of money with trades like this. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. from all of us at SMB. Train and trade well.